folks. We're going to talk to our man, Tim Ord. You can reach Tim at his website, Every Trading Day, ord-oracle.com. There he is. And don't forget, folks, at TFNN.com, right under the Services tab, Tim's got 2 great webinars, 6 secret ratios every trader should know. And as I say, we talk about many of those ratios right here with Tim every week. And the secret science of market tops, how to identify market tops. But we are going to be talking some metals today. And do we have enough action in metals today for our planned metals segment, Tim? Good afternoon.
Yeah, good afternoon. Actually, we're going to basically look at the bigger picture. We will get to silver. I know a lot of listeners wanted to talk about silver, but I kind of want to just give a background, kind of where we are, what to expect in the coming months, whatever. But I showed this chart before. This is the NDX down here. This is a monthly. Next window higher is the XAU NDX. So this is basically measures gold stocks against NASDAQ stocks. When this ratio is rising, gold stocks are outperforming NASDAQ stocks. When it's declining, then NASDAQ stocks is outperforming gold stocks. And we had a big turn up in 2000, looks like January 2024. And what it makes it significant, we did get the RSI above 50. Between 2012 to 2024, the RSI stayed basically below 50. And in early or mid 2024, it got above 50, and right now we're up around 76 and change. And that's how to identify. This is a change of character in the market. For the last 12 years, the monthly RSI of this ratio stayed below 50. And now we got above 50. For the next 12 years, we may stay above 50 with the RSI staying above 50, suggesting gold stocks are going to outperform the NASDAQ stocks. And we'll get to what we need to get to, but this is the monthly XAU to SPX, which is the equity market, not the NASDAQ market, but basically the SP market. Kind of a similar story. The market does a lot of cycle stuff here, but for 5 years it went sideways. Then they hit a high in looks like about 2020. That was probably the COVID crash right there. Then went again sideways, and now we just broke out. So we broke out of basically a 10-year base, and if you can't hold below the previous highs, it'll go up to the next higher high, which is this high up in here. And right now we're 0.063. Looks like it probably goes about 0.7. 0.17. Anyhow, to get there, to get to that high for this ratio, that would mean gold stocks will outperform the SPX stocks about 300%. So what I'm saying here, gold stocks compared to the NASDAQ, gold stocks compared to the SPX, gold stocks is probably the place to be. And so these gold stocks have been really beaten down over the last 12 years, and there's a major rally going on. We'll have some consolidations along the way, but in my opinion, these gold stocks are kind of a place to be comparing to the equity or the NDX and the SPX. So, having said that, let's look at, people are interested in the silver stocks, so that's what we're going to cover. This chart goes back to 2011 as far as I could take the data. And the bottom window, I think it's a monthly time frame. Yeah, it's a monthly SIL, which is basically the silver stocks. And we're comparing the SIL to SLV, SLV, the ETF for silver. So this is a monthly chart. So it kind of bounces up and down, whatever. And basically in 2000... silver stocks are expensive compared to the price of silver when it gets up to 2, anywhere from 2 to 2.3. And it's cheap anytime it gets down below 1.25. So that's the green area. Anything below 1.25 is silver stocks are cheap compared to silver. And when it gets above 0.2, which is this area up here, this is expensive. So you want to be a seller when it gets above 0.2 and be a buyer below 0.125. So I listed those times when that happened. So I got above there, picked out this high here, picked it high here. So anyhow, that's what, and actually I did some RSI studies on it too. And you can do the Bollinger Band thing on this thing too. So here you got a buy signal, which is basically the 2015, 2016 low. Gave a sell signal pretty close to high. Didn't really give a buy back in here, but it did give a sell signal at this high. Went back, gave a buy signal. Basically started approximately 2023 to 2025. It stayed cheap and rallied up. RSI got up here, and lo and behold, this thing is back down to 106. So okay, so what's that mean? Gold stocks or silver stocks are cheap compared to the price of silver. So even though it did get up RSI, it did give a kind of a sell signal back here, it's back into the buy signal. So let's take a deeper look. So valuation wise, silver stocks are cheap compared to the price of silver. So that's valuation wise. So you also got to look at momentum. So let's take a look at momentum. This is kind of a same chart, a little bit simplified. I just put a Bollinger Band on it here. So anytime this ratio gets above the mid Bollinger Band, it's a buy. So you got to buy back there. Got to sell when it fell below mid Bollinger Band. So you got to sell there. I probably should have made this SIL chart bigger so you can see it. But it gave a buy here, gave a sell here. Gave a buy basically there. That's like mid 2024. Rally up, RSI got way up, and now we're back into the buy again. Or you're basically closed below the lower Bollinger Band, but now you're into valuation wise, it's a buy. So what does that mean? So if you're a longer term trader, which I kind of am, this is a good value to buy silver stocks. Yeah, I'm hoping I'm making this clear. So, but we'll cover.
No, you're doing great, man. This is perfect. We'll take a quick break, and yeah, I was taking a look. Pretty remarkable. I didn't even realize that type of divergence in terms of the SIL versus the equities versus. Yeah, that SIL was at $80 in October, and we're at 109. The SLV was at $50 in October, and we're almost at 109. We're coming right back with Tim, folks. Stay tuned. Welcome back, folks. We get the S&Ps down by 31 points. We're talking with Tim Ord. Don't forget, folks, you can visit Tim at his website, ord-oracle.com. And then 2 great webinars at TFNN. And this is great stuff, Tim. So please keep going. We'll tell you, because I rushed it there at the end, but when you were talking about that, pretty remarkable. I look at the SIL, that high in October, you were at $80, right? The equities were already at $80. Now you're at 109 versus SLV was at 50 and you're at 104. You're almost at the same price now, and the metal was at 50 at the same price as the SIL was at like 80. Pretty remarkable.
Yeah, so anyhow, this is great value because really it needs, when it gets up around 2 up in this range, that's where you can have trouble, and that's what happened at these major highs in the past, up at 2 range. We're at half that. So to put that in perspective, in other words, gold stocks double and silver does not do anything. If silver stays exactly where it is right now, silver stocks would have to double to get the ratio back to 2.
Yeah.
So that's what that says. So, everything's kind of extended. Here's another chart that's just weird too. This is kind of a hard, I'm kind of skipping around here, but let's make it clear where we are. I guess if I own silver stocks, and I got quite a few of them, what I'm thinking is there's a rotation going on. What I think is going to happen, none of these stocks are actually going to go down much. Silver may consolidate, in this vicinity, but silver stocks, according to the ratio, are cheap compared to the price of silver. And that tells me that even though a big run-up has gone here, these silver stocks more or less are probably going to flip sideways. I don't think they're going to retrace much. If you look going back to as far as this chart goes, which is 2000, probably 15 or so, we're at the lowest low right now. We're actually lower now than we were in 2016. So gold stock or silver stocks are probably not even going to retrace much here. What I've been saying all along, there's going to be a rotation out of the big stocks into the lower price stocks. And I think that's happening right now. Because over the last month, I bought a bunch of small stocks, 5 to 20 cents, 25 cents, 50 cents. And I don't know, probably half of them doubled. And will that, continue? Maybe. Because I don't see any reason to sell them. Because price-wise, relative to the price of silver, gold or to silver stocks are cheap compared to the price of silver. So, is that going on in other markets too? Here's another market. This is the bullish percent index. The bullish percent index for the gold miners index measures the percent of stocks that are on point and figure buy signals in the GD or the gold miners index. And I did that ratio with GDX, and went back to 2014, and I did the valuation again. Anything below 0.1 was a buy. And so all these buys there are actually pretty close to at least short-term lows. Some are major lows. I picked out the COVID crash right there, but they all picked out decent lows. Here's a miner went down a little bit, but basically you're still close to the lows. We actually got a buy signal on that pullback we had last year. I forgot it was March or whatever. It gave a buy signal. That buy signal came right back into the price range again. So even though this market screamed up, this ratio is also giving a buy signal. Really unusual stuff going on. So I'm not afraid of gold stocks or silver stocks because these, if you go back and look, I think there's 13 signals here, not counting the current one. If you bought all those 13 signals, you would have been profitable on all of them. And here we are again, even though we ran up, this is giving a buy signal. We're at anything below 0.01. We're at 0.93 right now. Can it go lower? Yeah, maybe, but you're still, what that says, you're still close to some sort of a low in this vicinity. So, let's look at momentum. This is a momentum chart, not for silver, but just for GDX. And even though we're pulling back today, obviously, we're not even close to a sell signal on this indicator. We're up around, when I did this, we're up around plus 17 right now. To get a sell signal, you need to fall below zero. And all the blue areas are times when this indicator is above zero. And it did an excellent job picking out rallies. Not ideal there, but 90% of the time you're catching rallies. And it's still in a buy signal. What's going on? Well, I'm thinking what's going on is we're actually going to break out of these ratios. This ratio here is the XAU gold ratio. I talked about it last time, and I think this ratio is going to break out. I think gold is going to go higher probably over time, but it may consolidate here, and the rally in the silver stocks and actually gold stocks. This is XAU compared to gold, are going to actually continue higher. I think this ratio is going to break out of this, 15-year or 12-year sideways trading range. It's going to break up and go to the next higher high. And we're at 0.09 right now. It looks like about 0.18, which in other words, gold stocks will double compared to the price of gold. So even though gold's been rallying here for a number of years, and that was the place to be, I think now is the time where the stocks are going to outperform the gold going forward. And it's going to be that's what the charts say. I mean, this is a buy signal, and this one, getting back to this one, even though it didn't give a sell signal, we're back in valuation-wise, is back into a buy signal. So, I mean, they screen, but, how far can it go? I don't know. I mean, if you believe the charts.
Let me ask you, and not to jump in, but we got a couple minutes left. I got a couple questions from Tigers, okay? Right. And one of the questions first came from our Tiger, Frank, and he was asking, and, you were just talking about, you were talking, but the Bollinger Bands were on that last chart I was looking at, of course. And so Frank asks, that you've shown us some great ways to select potential buys of low-priced precious metal stocks using Bollinger Bands. Do you have a related method to trigger a sell for such a trade? And man, it's been a heck of a run. And how do you approach something like that, Tim, if you could?
Actually, good. We'll just show that on this chart. This is the monthly SIL. If you get 100%, this is a monthly chart. If you get 100%, the open close above the upper Bollinger Band, which has happened there, and you can't quite see, but there's a doji right there.
Okay,
and
100% over the upper boundary. Is that what you said of the band?
The open and close is above the upper Bollinger Band.
Okay.
When you get to that point, the market's stretched too far from the mid Bollinger Band, and what that says, the mid Bollinger Band is kind of the equilibrium of the price, I guess. When, if you're up above the mid Bollinger Band and it kind of drags along the mid Bollinger Band, that rally will continue for a long time. When it gets stretched way above the the mid Bollinger Band and above the outer Bollinger Band, you're two deviations away from the mid Bollinger Band. That means the market's stretched too far from the norm, and usually get a snapback type decline. And a lot of times that mid Bollinger Band becomes support.
And does that work for equities and the metals, just in terms of those charts?
Yeah, it worked on actually everything.
Across the board, I thought so. I just want to make sure.
Across the board on everything. But you want to look at the monthly time frame first before you go down to the smaller time frame.
I like it. Big picture, down to those small details. Tim, that was awesome, man. Yep. That was an awesome 20 minutes. I appreciate you breaking down the metals. Folks, check it out, ord-oracle.com. Those two great webinars. Tim, I'll talk to you Tuesday, man. Thanks so much.